RGLT economics. Today I want to talk again about the US dollar. I want to do this because there have been some interesting developments. On the one hand, we see that as the interest rates continued to rise, the US dollar is regaining some of its credibility, it seems, as evidenced in an influx of capital. On the other hand, we're seeing new progress to dedollarize by some of the, let's say, competitors of the United States on the economic and financial fronts. So I want to analyze these, and I want to point out exactly what is causing this dichotomy. And perhaps I want to also make some predictions, if I can, about what may actually happen in the end. But if you don't actually want to spend however long that I'm going to take to explain this, I think a short answer to this setup is that on the one hand, we have the financial establishment. Otherwise, perhaps we can briefly refer to them as the Wall Street. They seem to be more responsible financially, and they are, I believe, behind the push to establish some credibility to the US dollar, because that is where they draw their power. On the other hand, we have some political fanatics in the current administration that perhaps were, that they were supported by the Wall Street guys, but I guess people don't always make the correct bet, and in this case, they have bitten off more than they could chew, or perhaps to put it better, it's a case of be careful of what you wish for, and they got exactly what they wished for, but it was more than they expected. That is, that there are some fanatics in the current administration who, for political reasons, want to push the rest of the world, some of America's competitors, too hard, and the effect is these competitors are being pushed together to form a more coherent effort to de-dollarize. So that's basically the short of it. But I want to go a bit deeper into particularly the first side, about the financial establishment. We see that that interest rate has been continually rising in the United States, and in the first, I remember a year ago, over a year ago, indeed, when interest rate first started to rise, people were predicting heavy crashes in the stock market. I don't remember if I said something too similar, but I think if I did predict very strong, heavy crashes, I was wrong. But I think I was more sensible in saying that perhaps this would draw capital in to the United States. And I think in my later podcasts, I certainly corrected some of my initial impulses, and I did say that this interest rate increase is going to draw capital into the markets, into US dollar denominated assets. And this is exactly what has happened. Even though the U.S. economy on the fundamental level is not doing very well, the economy, you can't say that the economy is not properly capitalized. So that is one effect. But a more interesting effect, I think, is that I think the stability of the fundamental economy is, even though it appears to be bad, and I think it is still very bad in the United States, it seems to be there seems to be a change of sorts. Let me explain. As interest rate increases, the U.S. Treasury bonds become more interesting and an area to park your money. And indeed, a lot of the institutional investors and a lot of the smaller investors are actually pulling into U.S. Treasury bonds. This has caused a lot of the VC investments, the riskier, or perhaps the riskiest. No, it's not the riskiest, but one of the riskiest private equity endeavors to become less active. And this has caused a lot of startups to either fail or they have to be recapitalized because they are bleeding. They have been because they don't have sustainable business models, because they are bleeding cash as they are supposed to, but they are finding difficulty raising more capital. And the effect, I think, in the long term is perhaps a shift. I think this will lead to a shift in how new businesses are set up. I think this, in the long term, will be actually a healthy correction, in the sense that people who during the decade-long zero interest rate period were accustomed to taking risks at essentially no premium, now have to adapt, and they have to care more about the validity of the business model behind behind their investment. I think this adjustment in mindset, especially among the professional investor class, is necessary. It's healthy, because in the past they have become how to say accustomed to just throwing money around, and it seems like anything that they bet on, they can't lose. Now they really have to work, and people who are not good at it, they will find it very difficult to make a living there. And people who are good at it, who are good at finding value, in other words, people who are actually investors instead of just gamblers, they will be rewarded. So on that front, in that sense, I think this is going to be an interesting and valuable development, a valuable correction. And one last thing that I want to talk about is the stock market in the United States. That the financial establishment seem to be quite good at managing the expectations of the market. As we see, even though the interest rate has gone up dramatically. I think a year ago, very few people would predict that the interest rate today will be so high. A lot of people, I'm not going to name names, but a lot of people who are quite bearish on the US economy, perhaps, I guess, overly so, have predicted that the economy would collapse with the interest rate so high, because the corporations have debt levels that are exceptionally high. They cannot refinance, all that type of arguments. And I really believe that these high interest rates are putting high pressure on corporations, and they have been punishing corporations who acted recklessly during the zero interest rate era. I think their stocks indeed not doing very well compared to companies that have cash on hand. And this type of companies, if interest rates continue to rise, will eventually become bankrupt. But it seems like they have found ways in the meantime, I guess, to refinance. Now, what is interesting is that the financial establishment has been able to manage the expectations so that people always think that this will be the last rate hike, so that the stocks will bounce back, and this sustained optimism in the stock market has managed to keep the stocks relatively stable and relatively high. And part of this, of course, is, as I said in the beginning, because the influx of capital from abroad rushing into US dollar denominated assets. But part of it is also the management of expectations by the financial establishment. I think eventually they will raise the interest rate to a level that perhaps will be still higher than it is now. I think the exact levels, I'm not sure, but just one thing is sure, that the U.S. government is not going to pay back its debt. That we know. The debt ceiling will be raised and re-raised, and the deficit will continue to grow. Those things I'm pretty sure, but the interest rate will probably stay at a rather high level for this decade. And the reason for this is to provide a sense of credibility and stability in the US dollar. Because otherwise, there is very little left. The hope by the financial establishment, I mean, if I'm running the financial establishment, or perhaps one of the elites in the financial establishment, is to keep the interest rate high for the credibility and stability in the market and in the US dollars. And I want to help squeeze out the bubbles in debt financing, squeeze out the bubbles in venture capital and in private equity. And I hope that by the end of the decade, that the US economy will fundamentally be more sustainable. Sustainable not in the sense that it's environmentally sustainable, but sustainable in the sense that it's economically sustainable, that it can have some level of growth coming back. It can be sustainable in the sense that it does not need or does not depend excessively on natural resources or markets that are not fully under the control of the economy of the US regime. So that is what I think. And of course, on the other hand, we have the crazies in the current administration. Not going to say too much about them because saying too much about them is only going to. I think I already have said too much in the past, which is why whatever I put on any social media platform, never gets. It does not appear anywhere. So. Whatever, it's not very interesting to say too much about the crazies, except that they're crazy, that they are political fanatics. It is not very difficult to understand them, but it also is quite difficult to predict exactly what they will do next, because they are crazy. All right, thank you very much for listening. Check out my website, drjlt.com. Thank you very much.